Welcome back to the channel, Delta Nation investors. We have an exciting day. Chip manufacturers are down. The entire semiconductor sector is in the red, as you can see. Also, energy sector is in the red, but rest of the market doesn't look that bad. On top of that, China is not doing so hot. China is all red, giving back a lot of the gains we've seen over the last month. So Japan, China, semiconductors, all not doing that great. What are we going to do? Well, we're going to stay calm and collected, because if we have emotional balance, then our account balance will take care of itself.
Don't ask them, what do we know? What I forgot is better than whatever they remember.
The big news today that is impacting the market is Dutch company ASML released their earnings a day early and had a forecast in earnings that was lower than expected for the next quarter. So they cut their sales forecast, which hit the market kind of hard. Nvidia down 5%, AMD 5%, Micron, Intel, all the chip favorites are down. There's a term called canary in the coal mine. Back in the day, miners would bring a canary, which is a yellow bird that sings, with them into the coal mine. And if the canary dies, because it's a smaller animal that has smaller lungs, they know that there are toxic fumes about and gives them a warning to get out of the mine. ASML going down could be seen as a canary in the coal mine for the semiconductor industry, and that's why it crashed today. Meta also went down a little bit. A lot of huge companies gave back some of their early gains, but worry not, for this is Valhalla and we are already dead. Also, our Magnificent 8 portfolio is down 5% today, total of 10%. We're going to take a look at Crane shares, China Web ETF, which I recommended in August. And let's see what happened. It was 25, it went up to almost 40, and now it's low 30s. From 25 to 40 is kind of crazy, as I said when I made the Dragon portfolio, and we want to see a pullback of 5, 10, 20%. Awesome. Dragon portfolio has had a 10% pullback. This is a much better time to buy than at the top. Same with Crane shares ETF. 30 is a much better time to buy than at 40. 25 would have been better, but we can't go back in time. From 25 to 30 is 20%. So you can say it went up 20%, and then you got into it if you got into it now. Having gone into it where it's almost 70, 80% is crazy if it happens within a week or two. What we will do now for our Magnificent 8 portfolio is dollar cost average. As we continue to decode the world of investing, make sure to smash that like button and subscribe if you haven't already. I'll wait. Thank you. The reason we dollar cost average is if we believe it's a good business, a good company to own, and the price gets cheaper due to just normal volatility, people buying and selling, also known as price discovery, we want to buy it for less than we could have bought it last week. We've covered Alibaba, Tencent, Baidu, and JD. Because Tesla is about to release earnings, I will cover BYD next and compare it to Tesla as I have done in the past. So far, we've spent $3,000 in this portfolio, and it's down $300. Which is 10%. What we're going to do today is we're going to spend another $3,000 and dollar cost average all of these down. Other than Crane shares, that's not part of this portfolio. That is there just to give us a barometer of how the Chinese market is doing. Now, all of these can keep going down more. This is why we never purchase everything at once. If we have a $10,000 portfolio, we start off by spending a few $100s buying one share of each, and then if prices go down, we buy more. Especially on a day like this when things are down 5%, we're going to double down. We're going to get our portfolio up to about $5,000, close to $6,000. Okay? And then we will do another $3,000 purchase in the future, getting the total invested in this portfolio up to $10,000. And then we will watch this portfolio over its lifetime, maybe even adding more than $10,000, but let's try to keep it within $10,000 limit and see how it performs over time. As I've stated many times when discussing the Dragon portfolio, is this bump from 25 to 40 is unnatural. It was due to the Chinese government injecting liquidity via monetary and fiscal bazooka. So the market overreacted, but what is the real price? Well, it just kind of went back to the middle. When in doubt, go back to the average. Over the long term, I believe these companies will grow into their valuations, or their valuations will actually grow because they're relatively cheap for how high of a quality company they are relative to their counterparts and how quickly they're growing. These are the best of the best Chinese tech companies, especially the ones we've covered so far: Tencent, JD, Baidu, and Alibaba. If I had to choose four, those are the four I would choose, especially Tencent. Tencent is my third largest stock position. My biggest one is obviously Coinbase, followed by Meta, Facebook, and number 3 is Tencent. I believe in this company and its future, and I've put my money where my mouth is. Anyways, what we'll do now is buy an equal amount, about $300 to $400, basically doubling down on how many shares we already have. And the way we do this is we go to my holdings, we add transaction, and then we will add 6 shares at the current price, which will be 300. Yeah. BYD, we have 5 shares. We'll just get 5 more. Do we add in terms of shares or in terms of dollar value? You can decide yourself. We'll just do shares this time. NetEase, we have 3 shares at an average price of 96, I believe. So we can get 4 shares, I think, and get about the same price. Xiaomi, we have 100 shares. We'll just buy 100 more. JD, we have 11 shares at the average price of 43. Now it is 40, so we will purchase another 11 at 40. Baidu, we have 4 shares at the average price of 107. Now it's 93, so we will purchase 4 more at 93. Alibaba, we have 3 shares at the average price of 111. So at 101, we will buy 3 shares. And Pinduoduo, we have 3 shares at the average price of 147. Now it's 128. So we will buy 3 shares at 128. And that is how you dollar cost average your portfolio. Oh, did I not buy NetEase? Yeah, seems a little off. Is it 6? Yeah, NetEase. We did not buy correctly. So, we do our market value total cost. So let's bring the total cost to something equal. So NetEase, actually, we can increase the shares here probably to 5. Okay, so this is about equal weight. If ever trying to err on the side of more, always get more Tencent, in my opinion. Okay, so now we have the portfolio that's worth $5,850, and we're down $300. By averaging down, by doubling everything, now our total loss is only 4% instead of the 10 that it was earlier. And that is why you dollar cost average. Now the portfolio has to go up only 5% for us to break even instead of 10% for us to be back at zero. This is why you never purchase stocks all at once. This is why you scale in and dollar cost average in and keep your position size managed. If you put everything in one, and let's say, which one's the worst performer here today? Today it is, I guess, BYD. So if we believed in BYD more than the rest and it went down the most, our portfolio would be hurt. But some of these went down only 2% or almost 1%. So on average, the portfolio is only down 2.5%. This is why diversification is the only free lunch. I do believe in concentration as well when you have really high conviction, as I do in Coinbase. We dollar cost averaged our portfolio, and yeah, I like the way it looks now. These are much better prices to buy than a week ago when we started the portfolio at the height with one share, and then we dollar cost averaged, we bought more, and now we're buying another dollar cost average. So far we spent about $6,000. We'll spend another $3,000 if prices keep going down or if they go up. Either way, we're locking in the best average price and not trying to time the market at any one point. So why am I feeling bullish on these Chinese companies? I dive into each one of these companies in my series on this Dragon portfolio, the Magnificent 8 Chinese stocks, tech stocks. So far, we covered these 4. We will cover the other 4 in the following videos. But the big picture is China is stimulating their economy after nerfing their economy, especially the tech sector, through regulations. They are having a real estate implosion happening right now, and a lot of Chinese investors are locked up in real estate where they keep most of their net worth. This has been a big growth sector for China for many years, and they overbuilt. Similar to what US did during the financial crisis in 2006, 7, and 8, China just experienced a real estate bubble, and I think they're trying to shift their investors away from real estate and more into stocks. Also trying to encourage international investors to invest in the Chinese market. Chinese tech stocks are relatively undervalued compared to their US counterparts, and I explained which US counterpart each of these companies has. For example, Xiaomi is basically Apple of China. JD is Walmart/Amazon of China. Alibaba is kind of like Amazon. Tencent is Facebook meets Super App. Baidu is their Google, and so on. BYD is their version of their Tesla. BYD is already the biggest producer of electric cars in the world. They even supply Tesla with batteries. So all of these companies have compelling narratives, and their financials look amazing, where they're sitting on piles of cash and they're buying back stocks at historically low valuations because of many reasons why China has been in the dumps in the last couple of years. Looks like they're trying to turn this around by trying to stimulate their stock market, entice investors. Plus, they are also tech companies that are innovating and growing at breakneck speeds. I think it would be a mistake not to be invested in China, especially in their tech sector. That's why I've created this Dragon portfolio. And why I'm feeling so bullish on the Dragon. Next, let's take a look at the most anticipated earnings this week. First of all, ASML was supposed to report tomorrow before the market opens. They reported today for some reason. They're down 15 to 17%, which is dragging down Taiwan Semi and all of the semiconductor stocks, NVIDIA, AMD, Intel, Micron, and the rest. Also, the energy sector is down. This is because Iran and Israel conflict. Israel explicitly said they will not attack the oil fields or their nuclear reactors, but will only target military bases as retaliation, which means they're not going to destroy oil supplies in the world. Therefore, oil down. Kind of simplified version of geopolitics, but that's all that you actually need to know of why this now. This now because ASML down. ASML is like the starting base pillar of the semiconductor stack because you need the ASML machine to build the chips. If you're Taiwan Semi, NVIDIA designs the chips that Taiwan Semi makes using machines from ASML. So that's the stack. They're the bedrock stack. So if ASML is not shipping machines to Taiwan Semi and others, that means they're not producing as many chips. That means NVIDIA is not designing as many chips. So it's just a domino effect of logical reasoning. But could be a wrong conclusion the market is making there because these machines cost, I think, hundreds of millions of dollars that Taiwan and others buy to create the most advanced chips. If they already purchased these over the past couple of years, they might be at a level of supply that they're comfortable with and they do not need any more machines to meet the current demand. There are new chips coming out and maybe they can still use these same machines to make the new chips. They don't need to keep buying new machines because they are at capacity or near capacity. This may be an indicator that the semiconductor industry is at capacity and there is not going to be as much growth, but could be a faulty line of logical reasoning or could be right on. I don't know. I'm not a semiconductor manufacturing expert, but I can see it going both ways where all the fabs have ordered and paid for and are currently either taking delivery or already using all the machines they'll need in the next year or two from ASML. Therefore, ASML has kind of pulled forward the demand from the entire semiconductor industry, and now everybody's catching up producing because they were limited before. If anything, maybe Taiwan Semi and NVIDIA will actually still continue to grow for several quarters because ASML is just so far below on the stack that they're the first to know the capacity for manufacturing those types of chips has been met. Anyways, we're still bullish. AMD for sure and Micron. Micron because you need a memory to store all this data that's going to be created for AI and by AI, and AMD because they want to eat NVIDIA's lunch and they're coming for it. They're coming for it. Let's take a look at our various portfolios performances. Dragon portfolio, we'll take a look at that. We'll take a look at the end of 2024 and high interest rate sensitive companies, also known as the Big Short. Dragon portfolio is down only 5% after we did our dollar cost averaging today. We'll keep an eye on that as we continue our coverage of each of the 8 companies. We are halfway through. Check out that series if you haven't already. Next, end of 2024, before the rate cut portfolio, we made this a week before the rate cuts. It is up 12% since then. The biggest winners are Coinbase. Crane shares, even though they pulled back 25% from 40 to 31, we're still up 25% since we started coverage. Upstart is up 50% and Micron up 20%. Biggest loser is Redfin and Tesla. We'll take a look at Tesla some more because they're reporting earnings soon, and we'll compare it to BYD, which is one of the top 8 companies in China in our Dragon portfolio. Redfin, I think, needs interest rates to come down even more to stimulate purchasing of houses. Perhaps all the tornadoes and hurricanes in Florida will motivate people to start moving. Upstart, the reason it was in our interest rate sensitive large shorts portfolio is because Upstart provides AI services for loans, and there will be more loans as interest rates come down. More home loans, more car loans, more loans overall. So their business does better when there are more loans and when interest rates are lower. They were shorted by 30% when we started our coverage in March. And the company then was worth about $2 billion. It is now almost 5. So you could have doubled your money. It is still heavily shorted. I don't know when this gets updated, but this was in this portfolio for a reason. Carvana has gone up, I think, 5x since we started this. It was like $40. It's up almost 200 now. They're just crushing it. Price to earnings are a little out of hand. Perhaps there will be a pullback. I think this is a little rich at this point. But, the shorts had to cover, and who knows how long they took to cover. What's their short position now? I think the short was like 40 when we started this, between 20 and 40. Otherwise, it would have made the cut on the list. Shorts are now 14 as of end of September. So they covered quite a bit, but maybe still a lot of covering left to do. Big shorts, yeah. We added calls to this, bigger shorts, still as is. We started at 18, it's about 20. So yeah, everything is up other than Redfin. I mean, we started Redfin at 8, so it is still up, but we want more motion here. Rest of the week, as ASML has, nuked the market with their early announcement, Taiwan Semi will report Thursday, and then also Netflix. Netflix is a big one we'll pay attention to. Interesting company is WD-40. They make one product and it's amazing. Rest of the companies that are reporting are financial companies, largely. We got your US Bank Corp. We have Charles Schwab, Goldman Sachs, PNC, State Street, Interactive Brokers, Bank of America, Morgan Stanley, Citizens, Discover, Bank, American Express. So we've got some credit cards, banks. Yeah. And then we have Alcoa. Alcoa is an interesting one because this tells us how commodities like aluminum are doing. And aluminum is a big input commodity to manufacturing. Cars, houses, lots of stuff, right? So if this company does well or expects earnings to go up, then we can expect the economy to do well. So after they report, this will be a big indicator of what will happen rest of the week and how the markets will view the growth in the economy. But let me know what companies you're paying attention to or keeping an eye on that you're excited to see their earnings in the coming weeks. Maybe I'll start coverage of them. Do some heavy analysis for your benefit. And before we go, I just want to tease you with a little bit of this. What do we think it is? Coming soon to Delta Code YouTube channel and Substack near you. I don't get paid for doing this. My heart does get warmed with likes and subscribes. So if you want to fill my heart with joy, smash that like button, subscribe button, and share with your friends that are interested in learning how to invest. As always, may the force of compound interest be with you. I give you your moment of Zen.
Your value system says you believe in sleep more than you believe in grinding. Your value system says you are a consumer and not a producer. That you're spending more money than you're making. Why? Because you're a consumer, but you're reading all the books and you're saying everything the books are saying. But those books are not in alignment with your values. And if you're going to go to the next level, your values are going to have to change.
Slow line, meditated till there's no mind. Decorate me with shine till I go blind. BDSM dominated it with no bind. Safe words don't stop, both old don't go. No time, proceed to the next level. Proceed to the next level.
Level up.
Level up, 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 level up.